Good afternoon. Thank you for being here. My name is Miles Cowan. I'm the founder and CEO of Ldger. With me on stage is Hyung Kim, our head of financial markets. Firstly, I'd like to thank the Finovate team for putting on a fantastic conference. It's been a very inspiring day and a half at this point of presentations from the prior companies. If I could make the risk of asking for a quick show of hands, how many people here have heard of or perhaps even invested in marketplace originated credit, peer-to-peer loans of any sort? My suspicion there's probably a few more, but the next question, I wouldn't be surprised if people stay quiet, and it's how many people have securitized any of those loans? Not a surprising response. At Ldger, like many people, we find the innovation that is the hallmark of marketplace origination processes to be truly awe-inspiring. There have been enormous advances in the efficiency and transparency of credit being originated across many verticals to date. But as exciting as the innovation step is, it begs the question of what happens post-origination. And whether or not the actors in the industry are fully leveraging what are really these unique features of rich APIs and data that really set this credit apart from prior products. On that note, it's been exciting to watch over the last year an enormous explosion in the number and size of the securitizations. But somewhat distressingly, many of them look very, very familiar to me as a former attorney. They're slow, expensive, extremely document intensive, error-prone and risky for certain actors. I get it. I was part of the problem during those years. At Ldger, though, we think that there's a very good argument to be made to build a platform that can extend what really is some of the truly unique features of this credit further along the financial assets life cycle into the post-origination secondary market or capital markets pieces. So what we're going to show you today is quickly structuring and preparing to market a structured product built against a sample pool of marketplace loans. So here we are. What we've done, just to speed this up, is we've used an API key to pull in a pool of Prosper loans. These are going to form the starting point of a new securitization. So let's take a look at this page here. This gives us an overview of the loan portfolio we've imported, as long as some metrics on it that are particularly useful for the securitization process. More than just this is late, this is prepaid, et cetera, the concentration of the types of loans. We can filter this down further based on a number of filtering and selection criteria, but for now, let's just leave the entire pool together and go on to the next step of structuring the transaction. So our platform is driven from it's a template-driven approach. There was a very large, comparatively well-known transaction earlier this year. BlackRock pulled up $300+ million of Prosper loans. It's been called the Colt deal. Using that template, we permit a user against their own inventory selected on the prior step to build a securitization against the template, but all of the high-level attributes are user-definable. Your over-collateralization, your reserve accounts, allocation of principal between classes, the coupons, the terms. Once this is built out, we can save this down and head over to the next step of actually projecting cash flows through this transaction. Again, this is our inventory, our deal we've proposed, and now I can enter my belief as to the prepay and default performance of this pile of inventory. We can save multiple scenarios to allow us to flip against sort of good outcomes or worst case scenarios and quickly evaluate how this particular bespoke transaction is going to behave under a number of possible outcomes. Once we're happy with what we've done here, we step over to the next page. Looks like we're saving one more scenario. Here, we offer up the ability for the user to offer some or any of the pieces of the deal they just built. And by checking a box, we can allow them to put in a proposed selling price for a given tranche that they've just constructed. We provide some, also down at the bottom, we have the scenario analyses that were saved in the prior step. We can use to evaluate how the pieces that we retain and elect not to sell are going to perform. Using that, we can better gauge what we'd be willing to sell off the senior or otherwise other pieces of this deal for and figure out if to proceed. So once we're happy with this, we click over to the next step, and we're presented with an interesting option. In this case, this test account has got around $85 million of loans in it, certainly large enough by themselves to go to market and attempt to get this deal sold. More interestingly is if you were a much smaller holder, perhaps $1 million, $5 million, $10 million, we allow the user to offer this up to other users of the platform as a proposed transaction with the view that if we can sort of crowd securitize a larger number of users with an additional pool of inventory, the larger size deal will have better economics for everyone involved. And thereby we can connect what currently are very widely dispersed and sort of invisible to each other holders of much of this inventory today. This step actually can additionally be driven sort of in reverse, whereas I don't own inventory. I ask a question, Ldger, go out and source me enough loans to fill out a deal that looks like this, using all the same modeling tools, defining what would constitute qualifying inventory in the pool. And we, because we're connected to a large number of holders of this inventory, can approach them and engage their interest in aggregating their positions to do a transaction that otherwise could never have taken place. So what did we just see? In a couple of minutes, we took a very large step along the admittedly complicated process of building a structured product. But at this point, no one has spent any money or otherwise engaged in anything irreversible, and they're a lot closer to knowing whether or not this deal is going to get done. So we'd like to invite anyone who's holding these loans today and interested in trying to take part in such a transaction, anyone who's interested in buying pieces of these transactions, looking for risk-mitigated exposure to this exciting new assets class, or service providers, rating agencies, et cetera, who want to integrate at an API basis and do their job better in this flow. Find us at the booth, and thank you for your time.